Hey everyone, welcome to episode 14 in my monthly series where I review my high yield dividend stock picks of the month from a year ago. So on my YouTube channel, I do have a series called Top 3 Dividend Stock Picks of the Month designed for income, which I've been doing for over 2 years now. So in that video series, I give everyone my opinion on which 3 funds I feel are undervalued for that particular month, a great pickup. So in this monthly series, it's me going back to review those stock picks 1 year later to see if I was right or not. So doing this holds me accountable for my stock picks and further proves that I am a complete, honest, and open book with all of you, which I know all of you appreciate. And honestly, it's also to satisfy my own curiosity. So I know some of you disagree with my stock picks, and that's completely fine. So this is a way to see how they're actually doing 1 year later. So it's time to review my stock picks for the month of May 2021. Was I right? Was I wrong? Let's find out together, because I will not only check the stock price 1 year later, but also the status of the dividend or the distribution, which is a lot more important for us passive income investors. So let's get to it. I just want to take a quick moment to thank my sponsor and partner for the entire month of May, Hamilton ETFs, the experts in the financial sector. A title well deserved because they manage the top performing big Canadian banks ETF in terms of total return and performance, HCAL. They also have a brand new financials ETF, HFIN, which is even more broad in scope and covers the entire Canadian financials landscape. Not to mention, they created 2 of my favorite ETFs of all time, HYILD and HDIV, which I like to call all-in-one covered call ETF. So make sure to check out their website as well as the multiple videos I made on some of their funds, including Q&As with the founder of Hamilton ETFs, Rob Wessel. All links in the video description below. All right, so May 2021, the first pick, my US pick, was CLM, the Cornerstone Strategic Value Fund, which was also a pick this month for the month of May 2022. So CLM is a closed-end fund listed on the US stock market, primarily invests in US blue chip stocks. So the goal is really to provide investors high monthly income. So at the time of the pick, April 28th of 2021, it was at 11.76, which would give you a yield of 16.34. And keep in mind, this is when the annual dividend was 1.922. It resets every year, as we know. And for 2022, by the way, it increased dramatically. So my key points and reasoning for this one is actually the same key points and reasoning why it was a stock pick for May of 2022. So it's a very high yield fund, very, very aggressive with its income. The distribution policy is 21% of the fund's NAV annually. It's reset every year. Quality stocks, right? It's mostly blue chip US stocks, and of course the recent rights offering. That's what made the price tank recently, and that's what made the price tank also a year ago. So I think they're going to do this every year, probably in about April. So will it be a stock pick of the month for the month of May every single year going forward? Quite possibly. So when they have a rights offering, because it's a closed-end fund, right, they have to do an offering to put more shares in the market. So they typically do it in April and at a specific price, which is a lot lower than the current stock price, and this is why the stock price goes down. Same thing like a split fund overnight offering, same concept. So during that time, the NAV was 10.11 and the stock price was 12.12. So it was at a 20% premium. Right now, it's actually still at a premium, but I don't want to talk about it now. Let's focus on the picks, because I already discussed it in my stock picks of the month for May of 2022. So CLM was pick number 1. Pick number 2 was ZPH, the BMO US Put Right ETF. So this is an ETF from BMO that writes put options on a collection of big cap US stocks. So it's very similar to the covered call strategy, except it's a put strategy, right? So they don't really hold the underlying stocks. They only hold them if they're forced to buy them, because as we know, put options is an option to buy stocks, right? To buy stocks from someone else. Call is to sell stocks to someone else. So during the pick time, it was 16.22, so you would get a pretty nice yield of 7.40%. So what was my key points and reasoning? Well, I mentioned at that time that this fund is really a good fund to own for safety and good income, 7% plus. So the fund doesn't hold any underlying assets because it writes put options, right? It sells out of the money options to buy stocks that the fund manager, BMO in this case, is happy to own, even if the options are exercised. So it has a low to medium risk rating on this fund. And I think this is still the case. It's a perfect alternative to fixed income, basically things like bonds and preferred shares, because you get a little bit more yield. And of course, you have three versions, right? You have ZPH, you have which is Canadian currency hedged, you have ZWP, which is non-hedged, and you even have a US listing. So I wrote it's a great place to park money, short to medium term. So we'll check it out how it did later. Pick number 3 was FAP, Asia Pacific Income Investment Corporation from Aberdeen. So this is another closed-end fund like CLM that invests in fixed income, so government bonds, corporate bonds in the Asia Pacific region. So a little bit more exotic in terms of region. So at the time of the selection, it was down to $3, which would give you a nice yield of 9%. The annual dividend, I think, is still 27. Yeah, it's still 27 cents a share, so it hasn't changed. So my key points in reasoning was pretty simple. The fund was trading at a 22% discount. I think it's still trading at a discount now. For some reason, this one always trades at a discount. I think it's a little bit less than 22% right now. So it's a great way to diversify a portfolio because you have a harder to reach region here, right? India, China, Australia, etc., Asia Pacific, and it's one point is that it's the income that you get from this is mostly forward income, which is not really taxed that well. So this is why I suggested best suited for a TFSA or RSP, and consistent monthly income with a current yield of over 9%, which is really, really good for something that's fixed income. But this is because the fund uses leverage. So how did I do? Let's check out the monthly report card. All right, so here's the report card for May 2021. So let's start with CLM. So recently, like, it dropped again. Very recently because of a rights offering. So right now it's about $10.22. So you would have lost, if we're taking the stock price from a year ago, 13%. Was it a good pick? I still say yes, because the recent stock price drop was really because of a rights offering. It was expected. CLM is doing its job, everyone. It's for high monthly income. It's not for growth. Another point to remember is that the dividend did increase. Well, it's reset annually. So I hate saying increases or decreases. It's just reset annually. And during the stock pick time, that whole year afterwards, it was a big increase in stock price. Just now recently, it fell off a cliff because of the rights offering. So in my opinion, even though it's down 13% technically in terms of stock price, you would have had a big dividend of well over 13% with the increase a lot higher. So you would be in the green regardless if you count the income. So for me, it's a good stock pick. Some of you might disagree because it went down in price, but keep in mind, guys, the report card, was it a good pick of the month or not? It's much more heavily based on the income, not on the stock price, because we're buy and hold long-term investors. So CLM still doing its job. The annual dividend policy has remained the same. It was reset at 21%. So the dividend is, I think, just $2.17 now, which was a big jump from $1.92, except if it's going to reset in October, at the end of October. So if it stays, right now the NAV is about $8. So if it stays there, the dividend is going to go much lower. It's going to reset much lower for 2023. But we'll wait and see. ZPH down 11.28%. So here I put neutral. At least the dividend hasn't changed. It's been relatively, it's still the same thing. I think ZPH, it's 10 cents a month. So this pick was for safety, but I want to rephrase it now that less volatile is a little bit more accurate. I know many of you have put funds in here for short to medium term parking. I think it still could be a good fund to do that, except the recent performance lately and overall is making me see that maybe it's not really the best fund for parking or for an emergency fund or something like that. ZPay would probably be much better. So you'll get 1 or 2% less yield with ZPay, but ZPay does covered calls and puts, and it seems like that dual strategy is beating ZPay. So I would say neutral here because it wasn't a good pick, it wasn't a bad pick. You still got your 7% yield, you're still getting paid every month. Yes, you lost 11% in terms of stock price, but if you just keep holding it, you'll get your 7-8% a year no matter what. So for safety, probably not. But for less volatility, because it's less correlated to the overall US market, yes. So I'm not going to say it was a bad pick. I'm not going to say it was a good pick either. FAP, well, right now it's 275. So it actually went down by 8%. The dividend was about 9%. So considering the yield, you would still be slightly ahead. This is also neutral. I'm not going to say it was a bad pick, but I can't say it's a good pick either. The pick was really because of the big discount to NAV, which is still the case. And you would have broken even considering the income, right? What do I mean by that? Well, you're getting 9% yield. So if your stock price goes down by 8%, you're still ahead by 1%. So as long as you keep holding it, if you have FAP, I would suggest just to hold it. If you intend to hold it long term, you'll still make your 9%. Hopefully the dividend doesn't get reduced, but I'm starting honestly to get away from anything fixed income. I'm starting to realize I'm starting to dislike it the more I learn about these other funds like ZPay, like the preferred shares of split funds. I'd rather get those. So FAP, listen, if you want to diversify your portfolio, you want some Asia Pacific exposure, you really like diversification, if you feel it's necessary, I would still go for it. I would still keep it. It's never a bad thing to own a closed-end fund trading at a big discount, because no matter what happens, let's say they close the fund or whatever, you're going to get the NAV back. So if you buy it at a discount, you'll get more than what you paid for. So that's the report card, everyone. What's the grade that I would give myself? Out of maybe a C plus, a C, something like that. So 2 neutrals. CLM, I think is a good pick, was a good pick. It's doing its job. So not as great as the last report cards, but still definitely not an F or anything like that. So C plus would be my opinion for this month. Thank you so much for watching, guys. I really appreciate it. Please show your appreciation by hitting that like button. It helps the channel grow. It's free for you. It's a win-win. It takes 2 seconds. I would really appreciate it. Also consider subscribing if you like this type of content. My channel is all about investing for maximum passive income. So please subscribe, hit that little bell button as well so you're notified whenever a new video comes out. You don't want to miss my upcoming content. And of course, make sure to visit our website, passiveincomeinvesting.ca. That's where you could purchase and sign up for my digital product, the ultimate DIY investing package, which is on version 3 right now. So I'm very proud of this product. I'm very proud of this package. It comes with lifetime updates, so you only have to buy it once. And when you do, you will have all the next updates for free. And I do plan on making version 4, coming out with version 4 in Q3 of 2022. So that package will help you invest on your own. Basically, it has lists of funds, ETFs, closed-end funds, split funds, as well as a lot of sample portfolios. I have sample portfolios for Canadians and Americans, and tailored to different investing needs, not just income like I do, but also growth, also dividend. There's low risk income, aggressive income. So it's a very, very cool product to really help you build your own portfolio. That's really what it's designed for. So make sure to pick it up if you haven't already purchased it. And of course, there's also a bunch of free tools and resources on my website at the top right, free tools and resources. And right there on the homepage, I do offer a one-on-one consultation service with yours truly. So if ever you want really more personalized help, you could book a one-on-one with me. We'll have a 1-hour Zoom call. I'll go over your existing portfolio. I'll help you transition to an income portfolio. I'll answer all your questions, whatever your needs are. I really love helping people out, and my appointments do sell out very, very quickly. I apologize. I can't do more than 4 a week because I need time to do the content, to publish more content, of course. So just look at the little message on top of the calendar right there on the homepage to get a status of the appointments. Usually I will open up the appointments for the next month on the 25th of each month. So stay tuned for that. And also, if you want to join our community, we have a Facebook group with over 10,000 members now. Passive Income Investing, that's the name of the Facebook group. So if you like this sort of content, I strongly suggest you join the Facebook group. We monitor it very closely for spam, so it's very, very clean, and everyone shares their ideas and shows their portfolio and the income they're making every month. It's very, very exciting that the community is growing. So make sure to join us on Facebook. We're also on Instagram. So Instagram, make sure to follow us if you want a little bit more personal content on our life, including our move to Panama. So if you want a little bit more personalized content to us, you could always follow us on Instagram. So the mission of this channel, my mission, will never change. It will always be the same, everyone. It's to help everyday, normal, regular people invest on their own, to do it yourself investing, so they could build their own stream of passive income and enhance their quality of life and eventually become financially free, financially independent like us. So with that, take care, guys. Make sure to stay healthy, stay safe, and of course, stay passive. See you next time.